In this video, I will outline the steps you can take to get approved for an SBA loan in 2025. Additionally, I will share valuable data points and application tips that apply to all SBA loans available through any participating bank or lender. If you want to see more videos about all things finance, subscribe to this channel and hit the bell icon to receive notifications on when I release new videos. So without any further delay, let's dive right into the video. Understanding SBA loans, let's start with the basics. What is an SBA loan? SBA stands for the Small Business Administration, a government agency dedicated to assisting small businesses in securing funding through approved lenders. It's important to note that the SBA itself does not provide the loans, rather it collaborates with banks such as Wells Fargo, Chase, Bank of America, and many others. The SBA does not directly lend money, but guarantees a portion of the loan, which simplifies the approval process for you. Even if you are a new or growing business, there are various types of SBA loans, but the most prevalent is the SBA 7A loan. This option provides up to $5 million in working capital for purposes such as equipment purchases or refinancing existing debt. Repayment terms. The SBA 7A loan offers terms of up to 25 years, making it one of the longest repayment periods available. There are other types of SBA loans. The 504 loan is tailored for specific needs, offering loans of up to $5.5 million for commercial real estate, land, or equipment, also with terms up to 25 years. The microloan is designed for smaller funding needs. Microloans can provide up to $50,000 and come with repayment terms of up to 6 years. General requirements for SBA loans. The key criteria for qualifying for an SBA loan. The primary requirement is that you must run a for-profit business, which indicates that your company should be generating revenue in some form. Most nonprofit entities are ineligible for SBA loans, meaning they cannot qualify. However, if you are a nonprofit and need funding, there may be some grants available. Here are some important eligibility requirements for SBA loans. Your business must be owned and operated within the United States. A mailing address within the United States is required. Again, this is a general requirement that most of us can easily meet. Your business needs to be legally established as a sole proprietorship corporation, partnership, or LLC. If you apply for an SBA loan as a sole proprietor, you can utilize personal bank statements or tax returns, making it potentially easier for approval if you're generating income. Your business must be in an eligible industry. If your business primarily involves gambling, politics, pyramid sales, or adult entertainment, you will likely not qualify for an SBA loan. Most people already have a sense of what constitutes a scrutinized business. You must meet the SBA's definition of a small business, which generally requires fewer than 500 employees. This definition varies by industry. SBA loans are designed to assist those who may struggle to secure loans from other sources. When you visit the SBA website, you'll find specific eligibility criteria outlined. It clearly states that your business must be unable to obtain the required credit on reasonable terms from non-federal, non-state, and non-local government sources. Any SBA lender submitting your application will document this information. Creditworthiness. Lenders will review your credit score for SBA 7A loans. Interestingly, the SBA itself does not impose a specific credit score requirement. This means that any credit score criteria you see on a lender's website are set by the lender, not the SBA. I've seen some lenders only require as little as a fair credit score, which is in the mid 600s range, between 640 and 660. Finally, the SBA does not require a specific length of time for which your business must have been operating in order to be eligible for a loan. Need help getting an SBA loan or other financing? I work with a bunch of lenders who can assist business owners like you in securing loans and different funding options. Just click the link in the description, fill out the form, and schedule a call for a free custom funding plan. Next on the list is business credit. When it comes to SBA loans and business lines of credit, a solid personal credit score alone won't suffice. This is a crucial factor for SBA loan approval. SBA lenders will utilize the FICO Small Business Scoring Service, SBSS, to assess your business credit score, which ranges from 0 to 300. A score of at least 155 will enhance your chances of approval. For those simply seeking credit cards, a personal credit score can certainly help, but you'll eventually encounter limitations. If your goal is to expand, you might find that relying solely on personal credit will eventually lead to a plateau. Collateral requirements. Now let's talk about collateral requirements. The SBA mandates that lenders secure loans with collateral from all business owners, which can include personal guarantees or other acceptable forms of collateral, such as your home or other assets. However, for loans under $25,000, collateral is not necessary. If you want to avoid a lengthy financial review and extensive documentation, aim for a loan of $25,000 or less when starting out. For loans over $350,000, the collateral must cover as much of the loan amount as possible. Keep this in mind as you seek larger amounts, as the collateral should match your request effectively. Ability to repay. Finally, your ability to repay the loan is crucial. Your business needs to demonstrate that it can fulfill the repayment obligation, which means you'll have to present financial statements like income statements, balance sheets, and cash flow projections. However, if you're not requesting over $25,000, you won't need to provide an income statement, balance sheet, or cash flow projection. They may only ask for a few bank statements, around 3 or 4. You might be required to connect your bank account through a service like Plaid, or they may simply need you to provide a personal guarantee without any extensive documentation. Understanding loan requirements and application strategies. The specific documents required will vary based on the loan program, but here's a list of what you might need: business plan, financial statement, business financial statement, business certification and license, business debt schedule, bank statements, incorporation documents. Some lenders may also ask for tax returns. They may ask for both personal and business tax returns, but at a minimum, they are going to ask for some of the documents I previously mentioned. Easy application strategies. Choose the right loan. When applying for an SBA 7A loan or a microloan, I recommend starting with the SBA 7A loan. While I'm not suggesting you limit yourself to just this option, it is the most popular choice. The microloan is also quite well liked, but it only offers terms of up to 6 years and a maximum of $50,000. If you're applying for less than $25,000, a financial review or extensive documentation is usually not required. At most, you may need to provide bank statements to demonstrate your ability to repay the loan, which shouldn't be a significant hurdle if your income is sufficient. Consider your options. The mentioned SBA loans have lenient requirements and are designed for businesses operational for less than 1 year. Limit your request. Once you've chosen between an SBA 7A loan or a microloan, remember that not all banks offer microloans. For new businesses, it's best to request no more than $25,000 to increase your chances of approval. Keep your request under $25,000. Typically, this amount minimizes the need for extensive documentation. If documentation is requested, it usually consists of 3 to 4 months of bank statements, which can come from either your business or personal account. Establish a business credit score to streamline the loan process. Aim for an SBSS score of at least 155 to increase your chances of approval. Personal credit score matters. A strong personal credit score reduces the likelihood of lenders requesting additional financial documents, while a score of 640 to 660 is generally acceptable. A score of 680 or higher is ideal. Lenders look favorably on high income and credit scores, which often means less scrutiny during the approval process. If your credit score is weak or if you lack a business credit score, lenders may require more information to feel comfortable approving you. Summary of key points to recap. For an SBA 7A loan or SBA microloan, aim for a business credit score of 155 or higher, a personal credit score of at least 640 with 680 or higher, a loan request of no more than $25,000. Be prepared with 3 months, 90 days of bank statements, just in case. Knowing where to apply is crucial, so ensure you're approaching the right lenders in your area. Check directly with the lenders to confirm their requirements as they may change. Some banks like Bank of America and Chase may require 2 years of business operation. Other lenders, such as Wells Fargo, may have more flexible application processes. Lenders like Truist and PNC also vary in their requirements. If you found this information helpful, please like, subscribe, and share this video with anyone who might need guidance on SBA lenders or is interested in funding opportunities for their business.